Hello, everyone, and welcome again to the Tote the Note podcast. We're fortunate to have with us today Brent Carmichael from NCM. He was with us in session 1 and 2 on this subject of why no blue sky in Buy Here, Pay Here. And now we've also got Mark Burkholder joining us from Peachtree Planning. And I'm your host, Jim Rhoads with the Octane Group, and we're a small consulting and coaching firm now headquartered in Clearwater, Florida. And we're talking about the big subject, kind of taking on what I call the hardest questions in Buy Here, Pay Here. And Brent is going to join us as a kind of a featured guest as we talk through some of those. Mark is here as a specialist in succession planning. So as we had session 1 where we talked about this matter of why is there no blue sky in Buy Here, Pay Here, and we kind of framed the problem in that session. And then in the second session, we tackled kind of some solutions and ways to maybe start to solve some of that. And we want to continue that conversation today and bring Mark into it, especially as it relates to handoffs and how to transfer equity and ownership and the value that might be in a Buy Here, Pay Here business. So again, gentlemen, thanks for joining us. For those of you who don't know Brent, Brent is a guy who's been in the Buy Here, Pay Here space since '89. He's been a 20 group moderator with NCM for 14 years now, and has 9 Buy Here, Pay Here groups, right, at NCM. So he's a busy guy. So we're lucky that he's been able to find some time to join us. And then Mark, as I said, is with Peachtree Planning. I met Mark at a conference not long ago, and when I understood his background and my whole interest in valuation and helping dealers make a smoother exit, then it was natural that Mark and I should spend some time together.
Thank you, sir.
Yeah, of course. Glad to have you here. And so let's just jump right into this subject of valuation and for those who didn't see the first 2 sessions, I'll just kind of quickly recap. We talked about that blue sky. If we think about the definition of blue sky for the purpose of our conversation here, it's really what I'm thinking about it as is versus a liquidation scenario. If you're a dealer and you know you can liquidate your portfolio, you can liquidate your real estate and your inventory, you kind of know what that looks like if you go to the open market and sell that stuff. What I'm saying is, why don't we have any more blue sky than that in our business? And Brent, you had a chance to speak to it before. I'll give Mark a chance to jump in. What are you seeing, Mark? Why are dealers not able to enjoy more blue sky at the time they're ready to exit?
Well, I think what you guys commented on the first session, it's such an individually owned asset, and it's all managed, controlled, operated individually, where I think you both commented on the last session where it was Ford and Chevy dealerships and all those guys. So they have a very systemized way in order to accomplish their goals. Whenever you pass this down or pass a Buy Here, Pay Here, you've got notes receivable, you've got different things that are going to ebb and flow as the transition happens. So I think some people who are out there holding a note, are paying the note. Oh, you transferred the dealership? I'm not going to pay my note anymore. And I think there's that natural bleed off or that natural, hey, I'm not going to do it until you come get me. And some of those notes just get washed away in the wash, so to say. Okay. I think you guys made a great point on the last episode, saying that 90 cents on the dollar. Well, that's only for a portion of it. Then it's 30 cents on the dollar or 60 cents on the dollar, and by the time you wash it out, I think that's the biggest thing when it comes to succession planning and going fishing, like you guys said, or maintaining ownership and how to do it. And the easiest thing to do, and probably the most financially easiest thing to do, is the lineal succession plan, which is passing it down to a son, a daughter, a niece, a nephew, someone that's maybe worked in the dealership and is going to continue to grow the dealership under the same name or the same EIN number, and just kind of keep rolling.
I think you told me once before that there are really only a couple of ways that dealers exit this business. You want to share with me what those are?
Well, you're either going to sell it to an insider, you're going to sell it to an outsider, or you're going to die at your desk. One of those 3 things are going to happen. And so the most tax efficient thing to do is sell it to an insider, even a GM, someone who's there who can keep it rolling. The least efficient thing to do is to die at your desk, because then you got more than likelihood, liquidation, probate, all that kind of stuff that has to happen. That what I've seen, a lot of dealers try to, hey, call my buddy. He'll help you liquidate all this stuff because he knows, he knows the cost of it. What a pain in the butt for the buddy, right? I mean, it really is.
Yeah. So Brent, what's been your perspective? What have you seen in some of the liquidation scenarios you've seen or whatever?
Well, unfortunately, I guess I should say, recently we've had two of our clients pass away last fall, neither of which had a lineal succession plan like Mark mentioned. They didn't have anybody in the family that wanted any part of the business. And so now they are wrapped up. And Mark, unfortunately, I'm the friend to help liquidate on one of those. The first phone call was of the brother saying, hey, I saw your name here. He spoke highly of you. Can you help me do this? And I'm like, hey, I'm not an attorney. Don't play one on TV. That's not what I do. So, but again, kind of to your point, they just weren't ready for any kind of a lineal succession. And even within that operation, the biggest issue I see, Mark, and you probably see this as well, is there a manager there that might have the personal financial wherewithal, especially if we're talking about a dealership that has some sort of a debt structure? And is that bank, that line of credit that's holding that note going to be willing to, and Jim, I'll use you as my example, as my executive manager, are they going to allow Jim now to be the signee on that? And does Jim have a strong enough personal guarantee to offset some of that? And I think that's a struggle with selling to a current manager that we're seeing with a couple of these that we are working with, because there's one of them, an executive manager does want to purchase the business, but the bank is not confident with them as subdebting to that person. So it's not just on the notes. There was a personal guarantee from the owner that passed away. So, I would love to hear from you on how do we help do that for one of our managers, right? Because we know that they don't own properties worth $1 million and they don't have this strong net worth from a personal guarantee standpoint. Because I'd love to sell it to Jim, and I pay Jim well, don't get me wrong, but what's my banking relationship? Are they just going to be willing to replace you, Mark, with Jim?
Well, that goes back to what I fundamentally do as a practice. And I will tell this to every dealer. I don't care if you've been in the business for 30, 40, 50 years, 3 or 4 or 5 weeks. Go out, get someone like me. It doesn't have to be me, just someone who has experience in the automobile industry. Set up a plan that is documented. I have continuity plans. Russell Moore down in Texas helped me. He said, man, this is really what we need in this industry. Here's who you call. Here's my banking relationships. Here's this. I mean, it's a 7-page document that I created, and I send it out to people and go, hey, just do this. There's no fee for it. I'm just giving it to you. Just do this, But on top of that, that's just a stopgap. Like when I go in and go, do you have a last will and testament? Do you have financial directives? Do you have healthcare directives? Is there a plan if something unfortunate happens to you? I know we all think we're going to live a long and prosperous life of 85, 90 years old, and we're going to pass away in our sleep, right? I mean, that's the goal, or on a golf course.
Yeah, right.
So what people need to do, and this is when we walk through with people going, are you and your wife on the checking account? If you don't have a will, do you have stuff that the wife can now go get some money? I have $3 million, but it's tied up in a checking account that only I'm on.
Yeah.
That's a problem.
Sure.
I don't have a will. I don't have this. I don't have this. So that's the first thing that I do with people. I met with a guy yesterday, probably worth 60 to 65 million, and didn't have a will.
Wow.
That's a problem.
Yeah.
On your reinsurance companies, do you have beneficiaries listed on the reinsurance companies?
Yeah.
Most dealers I talk to, they don't even know that was an option.
Sure.
It just goes to their estate, which now that becomes a taxable problem when it gets added on top of your estate. So going to what Brent said, how do you do it? I try to do it from the front end, because the back end is a catastrophe. I mean, it's just at that point, you're reacting to the wreck, and you're not planning for the vacation,
Right. Yeah.
So it's a
I'm
tough.
I'm glad you brought that up in that way, because it ties back to the way I think about this, which is you guys know that most of my work has been in the startup and early stage space. We do a lot of launch work with clients, launching them into buy here, pay here. And so I really want to understand these pieces so that I can help our clients step into this business in a way that they're able to create more value, over time. And so that means if we have a plan going in, then you can cross all of these T's. So it's interesting. One of the words that you used that I hadn't thought to include in the first 2 episodes was this word continuity. When you have some degree of continuity and you have all those things that you just mentioned, Mark, the ability to hand off, even in the event of your death, there's a smooth handoff, that happens there. Then that to me is the best scenario, where we can start to make sure that we've got all those T's crossed. It is easy for us to convey ownership, to transfer ownership out to another party, regardless of whether that's inside or outside, as you mentioned. And then one other quick thing I want to throw in there is, as Brent talked about the scenario he ran through, then I remember a scenario years ago where a dealer sold he had 4 locations, if I recall, and he offered to all of his standing managers an acquisition proposal, and he just made it favorable enough that they all opted in and they all became owners over a period of time. And so these are just examples of scenarios. Like, I think there can be a number of ways to get there, but I want to make sure that we are crossing all the T's and putting ourselves in a position. I'm gonna check on Brent. I don't see him in the meeting, so I'm only seeing you and me.
Yeah, Brent's here.
Yeah.
Okay, we just lost his video for a bit, so I was still seeing you. Yeah, for whatever reason, I was still seeing Mark over there, but I wasn't seeing you, Brent.
Losing my video is not a great loss, I promise you.
I get you.
Jim, to comment on what you were saying, a great thing, and Brent, this may help over time. It may be something to tell your 20 groups what to do. If you have one thing that I've really found out that banks like is a long-standing relationship.
Mm-hmm.
Most of the time, those banks have LOCs, lines of credit, that are either tied to the cars, tied to the property, tied to stuff, but they're all tied to dad, right? That's who's running the business. Then you've got the second generation coming in. They don't know them. And they may be 20 years old, 21 years old, 22. What I've encouraged my guys to do, take them with you. Take them with you when you have to do your personal financial statement update. You have to go meet with the banker. Take that heir apparent with you and do it for years. Now they're building a relationship. So whenever there is a transition plan, it's so much more seamless. And hey, the bank now has a relationship, and they'll allow you to maybe take over ownership in a much more efficient way, economically efficient way.
Yeah,
that's a great point, Mark. And unfortunately for the 2 that I know that this happened to recently, obviously, like you said, we don't plan that that's ever going to happen. So when it does, and again, a key manager wants to purchase one, but there is no relationship because obviously it was unexpected for the dealer principal to pass away at that point. But I think that's a great, huge advice that I will pass along for sure, because I do have a lot of dealers now looking at that, that are, I'm going to say my age and a little older. They're late 50s, which I know is the new 40s, but getting kind of up in years, going, I only want to do this for another 10. And so now's the time, if we do have that manager that's been with us that we think would be a viable candidate, to start making those relationships with the bank at that point. Because we know that they're not going to have the financial wherewithal to go out and borrow money on their own and write Jim a check for his dealership all at once. This is going to have to be some sort of an owner finance type of deal. And again, we're just not seeing, unfortunately, I hate to say this, but we're not seeing a lot of the linear succession with family. A lot of the dealers I work with have kids that are old enough but have chosen to do something different. Yeah. So their only options are bulk sell the portfolio and the inventory, collect it out over a couple of years. And we'd love to have some managers take over, but may not quite be staffed for that just yet. And again, staying in the vein of under a $10 million dealer, which is our average dealer, I think I mentioned on the other ones, is around 8 or 9 mil. Yeah. So this is, what we're talking about is directly relevant to our average dealer right now.
Yeah, and I think, we talked about that, your company years ago sold out to a private equity group. Am I right? That was the buyer was private equity?
That was a publicly traded company that we sold
Okay.
to.
Okay.
Yeah.
So, those scenarios happen, but those are less common in our segment. So I think the one that happens more often is those dealers want to exit that are in this 8 to 10 million, whatever size portfolio. They've got a long established company. And it would be my hope that that company was also consistent in the way that it did business. It was built on pretty consistent thing. So that's where I begin to think about, okay, so I follow everything you guys said, and it's challenging, and we don't have somebody in the family who's willing to take it over. But I still feel like there should be enough value in acquiring an established operation. If the operation, meets the checklist, then, whether it's to a competitor in the next town over, there ought to be a market for a scenario that's short of liquidation or in addition to another liquidation. So that's what I want to press with you guys to find out today. How would I go about that? So Mark, let me run this one at you first. Like if I'm a buy here, pay here dealer, and I got kind of a list prepared, do I have another dealer if I've got a well-documented set of systems and processes? I've got policies and procedures that are well established. They've been there for a long time, and let's say they're even held in the cloud, and they're well established. I've got an organizational chart. He's laughing out loud over there, folks.
Yes.
Yeah,
that doesn't happen.
I know, and so we're seeing that. And
fantasy here, Mark. You and I know that we've been around.
Yeah. So this is the work we're doing. So this is why it matters to me. And so this is kind of the work that we're doing with some of our clients. So now if I've got an organizational chart that has clear job descriptions, good pay plans for everybody, and I've got a compliance manual, it's well established, and we can document that we've been working to comply with, the regulatory things. I've got a clear record of financials, and which would be, balance sheet, P&L, cash flow statements, all those things are up to date. And then I've got a history of those going back. And hopefully I show some consistency in that. We understand buy here, pay here, the nature of it. There'd be some ebbs and flows and peaks and valleys, but generally I would have some consistency there. I've got performance metrics, right? I've got my history of portfolio results. I've got a history of underwriting practices. We can document how we've done it up to now. Maybe we've even got a good software in place to show how we do our underwriting. And I've got a good DMS system. And I would throw in that's a browser-based DMS system, because it occurs to me that's something that's important in a handoff, or helpful in a handoff. And then I've got my 20 group composite, right? Because I'm surely a 20 group member, right, Brent? And so I've got that, and maybe I've even got some real estate in my deal. So I'm just saying, does that scenario sound to you like I should have more value than a dealer who doesn't have those things?
Oh, unequivocally, yes.
Okay.
I mean,
so why don't we have that in buy here, pay here? That's what I'm really trying to drill down to. Why don't we have those things?
Because you have a good old boy network that this is more than likely the patriarch has probably been in it for 20, 30 years.
Yeah.
And this is the way I do it. And no one's going to change the way I do it.
Sure.
And it works for me.
Sure.
I have property. I have this. I've paid for college educations, or I've done whatever I've done. I don't need all that fancy stuff. I think where that ball comes into play most certainly is when that patriarch goes to step down.
Yeah.
If you can get, like right now, I'm working with someone that the uncle and the dad, so they're brothers. They've been in it for 35 years. The son who is taking over is 27 years old. Who do I talk to every day?
Right.
I talk to the son who's 27 years old.
Mm-hmm.
Hey, I need this. I need this. I need this. I need this measured. I need this measured. He's on a computer. He's doing all kinds of stuff. And so we're setting this whole thing up for him to take over in the most economic way possible. But he wants to make sure all the things that you just listed are moving forward in his world, because they don't currently exist.
Right.
That
Gotcha.
would be kind of my observation of that.
Yeah. What do you got to throw in there, Brent?
Well, and again, we know you're kind of in that dealer. I hate to say it in this day and age, is still an exception to the rule. The one that you described. We wish they were all that way. And to Mark's point, it is a very fractured industry. There is a million ways to do this, and Mark and I have both seen probably most of those million ways to do this business. But that there is value in that, obviously intrinsic value in that dealer that you mentioned. And again, the right buyer would understand that, see that, and may be willing to pay a multiple for that. But the one thing that we keep forgetting, Jim, is the wild card is that portfolio performance, right? What is it? TD Ameritrade tells you past performance doesn't guarantee future results, right? Basically, that's what I think hurts our blue sky more than anything else. Is just because you ran that dealership as a benchmark dealer, let's say from a
That's
20
right.
group standpoint, doesn't necessarily mean that $10 million is going to perform that way when you're not there, when my people are there or your manager is there. And I think that's what affects what we would consider true blue sky, right? If I was going to sell for a multiple is, and I know you have benchmark numbers, but when you step out or two or three of your people step out because of my purchase, I can't guarantee that 10 million is still going to function the way it has for even the last 20 years. And so I think that's where the hesitancy is in paying that future profitability, is because we truly don't know. And I think with terms getting where they are now, we're about 42 months for our average dealer. I think that hurts us even more. And Mark can kind of chime in on that or not. I think the longer our terms get, the less opportunity we're ever going to have to get blue sky. I think we had our best opportunities when our average term was that 24 months, 28 months, 30 months, because then we knew that portfolio was going to turn pretty quickly. And so we pretty much had a better idea of what the performance was going to be. Now, when you have to wait 36, 40, 42 months to see how that's going to perform, I think some people don't have that kind of patience or aren't willing to pay for that kind of patience.
Then it also goes into what's your price point. If your price point is lower and your demographics are different and your economic status is different, and you got to span that out, the car may not last that long. And people, they take that into account when they look at those, it's financed for 36 months. It may not make it for 18. Well, then they're dealing with some negative stuff that's going to come back on them.
Sure.
And that'll minimize the blue sky as well.
Yeah. Go ahead, Brent.
We talked about on one of the last sessions, if you can find a financial buyer, that's kind of what I would want if I'm selling my dealership, because he's just going to be the money and let me do what I want to do. The strategic is where, if that's the buyer that probably approaches you, that you're not going to get as much. And that's where, internal, some sort of a succession plan. My son's going to take over. Mark, if I buy your dealership, you step out, your son takes over. That helps increase the value. And if I have that written plan that this was our succession plan going into it, I think those are both huge in helping that value. But I do want to I've got a reputation as an optimistic pessimist, right? I hope for the best, but I prepare for the worst, right? So when I'm working with dealers that are talking about this, it's, hey, look, you are good, but just understand that this is not a Ford store or a Toyota store. You're not going to get 4 times your earnings or 6 times your earnings because you have that nice large asset of $10 million out there that hasn't quite performed yet. It's a good thing to have the $10 million, but it's going to keep you from maybe obtaining what you think you should get for your dealership.
And maybe I can land right in between on the optimistic and pessimistic side. Like, I wouldn't be looking for that big multiple either, but I think I could help a dealer create enough structure and, in a way that if you think about, we're going to, you said about a process where you say, we're going to move this company to where it's more scalable. First, we forget about the exit. We're just going to focus on making this company more scalable, which means what? In order for us to replicate into a new location, we got to have all these systems and processes, all the things we just talked about. So it's like, I got to get this stuff out of my head and then onto paper, into a playbook that they can use at a new store and a new store. So I'm moving towards scale first. All those things that I do in moving towards scaling, I think are going to serve me when it's time to exit. It's about the playbook, or what I refer to as an owner's manual, if I'm buying a car. And then I also think about the Tote the Note component. If I'm a seller and I got a manager who's my buyer, I can probably tote the note for them in a way that's advantageous for both of us. And I can get a little extra out of it because I'm not a liquidation scenario and I'm creative in financing and I'm going to make it work. And if I have to serve as the guarantor at the bank in transition, I can probably make it work in a way that the manager can step in and acquire, so these are kind of, I pride myself in being pretty creative about those kind of things. I feel like there's usually going to be a way to get there, but I'm not looking for big multiples, but I am looking for a little premium, for making a smooth transition. And I think all those things about scale, if I'm ready to scale, then the young person who's got more energy, they can take this business and hopefully they'll run with it and scale it. They'll certainly be in a position to do that if I put the right infrastructure in place. Mark, what do you think about all that?
I think that's dead on. I mean, I don't think there's a downside to it.
Yeah. I mean, it would help us. It would help us take more vacation time, right? If we've got all those systems in place, at the minimum, I can be away from my dealership more. I can step into more of that absentee owner kind of role at a minimum, right?
Yeah, and I think really the pertinent thing there is most owners don't want to do that. So if you provide a service that says, hey, I'll come help you do that with you.
Sure.
And what I tell people often, because no one wants to do what I do, right? No one wants to set up all these documents and prepare for, the demise of you. And
sure.
That's just not what you want to do.
Yeah.
They do like the ultimate tax benefits that I can do and arrange for succession planning. And we do a lot of that stuff is
sure.
getting people at a higher, a much better tax advantaged position. But I tell people all the time, my job is to push you a little bit, and I'm here to be your quarterback, but we're going to move at your pace. And when I notice that you're moving like a turtle, I may come pick you up and help you across the road a little bit.
Yeah.
And that always seems to open the door for them. Ultimately, what I've learned dealing with, thousands of car dealers over time is they're all typically alphas who don't want to be told what to do.
Right.
And if you make it their idea, hey, this is something, what do you think about this? And turn that question, what do you think? Do you think if we do this and we get these systems and operations in place, we could get you more money upon your exit and you could enjoy your retirement longer? Right. What do you think?
Sure.
And they're going to go, well, I like more money, so let's do that.
Yeah, sure. I like it. I think that's smart. Anything to add to that, Brent?
No, but Mark, you and I both know that no matter what offer they get, it's never enough.
Right.
No matter how good we are, I'm 25 years, I've got blood, sweat, and tears in this, and that's all you're getting. You can explain to them that this is a phenomenal offer, and it's never enough. And that's what makes them successful is that pride, dare I say, ego that pushes them to be successful. So yeah, anything that's less than 12 times earnings hurts their feelings, but still, all of those things that Jim, that you mentioned and Mark has mentioned so far are absolutely on point.
Sure.
Well, that's one thing I told a lady last week. She said that exactly. It's worth more than this. I said, well, what you're doing is you're equating the worth and equaling it to the love that you have. There is no intrinsic value for the love that you have of your dealership to that other guy who's buying it. It is an A and B equals C transaction.
Yeah.
Take out emotions because you have too many emotions.
Yeah.
And
I get the idea.
That's a hard conversation to have.
Yeah, it is. And it's good that there are folks like you there to have that conversation, because you're right. We get a little emotion and we got a lot of hard work, a lot of sweat equity, built up in what we've done. And we certainly get that. And so, you can see why for me, the motivation is just try to help these folks enjoy more equity at the time of exit. And to the extent we can start to go to work on that at the beginning, then, it doesn't have to be a huge undertaking in the last, 12 months that you're thinking about exiting. You can position yourself for scaling, for exiting, succession plans, whatever that might look like. If there's a playbook or an owner's manual in the middle of that, I feel like that goes a long way toward, making for a better handoff and making for hopefully a more financially successful handoff.
Well, to your point, when you go on vacation, you plan the vacation.
Yeah.
Right? It takes time. You make reservations, you do all this stuff. you don't react.
Yeah.
You don't, most people, hey, we're not going on vacation next week. Let's go find a place. It's triple the cost.
Right.
Same with what you're saying. If you plan for this and don't react to it, you're going to come out much, much more ahead.
Yeah, very good. Well, I know we could talk about this thing all day long. Like there's just so much to do. And I think, we all want the same thing. Clients to be able to make a good exit and get some value out of that, all that sweat that they put in, not to mention the risk. I mean, they took a lot of risk to get to that place. And so there's just the nature of our buy here, pay here business. And, Brent's right. Our portfolio that we create is the primary asset in our business a lot of times. And so most times. And so that's where we just want to make sure that that portfolio performs consistently and that we could expect that somebody else could step in behind us and have the same results. And that's why I keep kind of saying, our playbook is part of what helps us do that. Having a track record of showing how that, some evidence of past experience is helpful. Brent's right on his TD, it was a TD Ameritrade you referenced, that idea that nobody could have seen COVID, and the impact that was going to have on portfolios and some of those kind of things. Things can change, but at least if we've got some track record of history, we've got some basis for, what things might look like going forward. Brent, you have anything to add? We're going to start to wrap up here.
No. I mean, I think we've done a great job of covering pretty much everything. So
good. Well, I think we're going to remind our viewers and listeners to make sure and subscribe to our YouTube channel over there. That's going to be the first place you'll find this. And ultimately, they'll get pushed over to the traditional podcast channel. So you'll be able to find the audio version over there as well. But certainly subscribe to the Octane Group's YouTube channel. And you can find Brent at NCM. What's your email address again, Brent?
It's bcarmichael@ncmassociates.com.
Very good. And we can find Mark Burkholder at Peachtree Planning. Mark, what's your best email address?
Best way to contact me is a website, my company's website. I help independentautoddealers.com.
Nice. Very good. That's easy enough. Well, gentlemen, we appreciate you joining us. And again, I'm sure we'll have you back, Mark. There's plenty to talk about. Brent will continue to join us and as we take on the hard questions. I had to have somebody like Brent because if the questions are hard, I got to have somebody smart to help me out with these questions. So we got Brent to help out on that, and we look forward to continue these conversations. But again, gentlemen, thank you so much for joining us. Until next time, signing off.
Thank you.
Thank you, Jim.